Good morning, everyone. Thank you for joining us bright and early on a Wednesday morning. I'm Amy Goldman, and I work with our partner firms at SEO with the Alternative Investments Group. Today, you will get a closer look at our partner firm, Bain Capital, their strategies, and what you might expect as an associate. With such a large turnout, we appreciate all of the questions we received that were submitted prior to this session, and we'll aim to get through as many as we can. Towards the end, we'll be reviewing those. If any questions come up during the presentation or we didn't get to your question that was submitted, please feel free to reach out after the session and we'll pass them on for you. Just a reminder, please turn your cameras on and mute your line. And now I'll turn it over to Emily James to kick off the discussion.
Great. Thank you, Amy. And good morning, everyone. As Amy mentioned, my name is Emily James. I am a VP on our Diversity, Equity, and Inclusion team here at Bain Capital. And in addition to really helping to drive our overall DEI strategy across recruiting, talent development, external partnerships, et cetera, one of the best parts of my job is truly that engagement with organizations like SEO as we continue to ensure that our pipeline is as diverse as possible as we think about bringing talent into Bain Capital and ensuring that we are sharing all of the wonderful things about our firm with as diverse a candidate pool as possible. So we do these presentations on a yearly basis, and I hope that you enjoy the opportunity to hear from a number of my colleagues this morning as we share with you a bit about really all of the business units that actively recruit at the associate level and bring talent in at that kind of 2 to 3 years out of undergrad. So with that, let me share my screen. And let's see. I'm going to pop this into presentation mode. Make sure that, Amy, can you confirm that everything looks correct? So we're going to start this morning with just some team introductions so you know who's here with us this morning from Bain Capital. We will do just a kind of a brief overall firm overview, but really the bulk of our time together will be kind of a deep dive into, as I mentioned, those business units that do actively recruit at the associate level. So you can hear from associates who work within each of these business units, learn a little bit more about what their business units do and what they do in their roles. We will touch on our employee networks, which are employee resource groups that my team oversees, and give you a sense for kind of how those help to contribute to the culture here at Bain Capital. And then my colleague, Emily Cardenas, who I will have introduce herself in a moment, will take us just through some upcoming kind of interview timing and tips for you all as you think about potential next steps at Bain Capital. And so before moving to the next slide, Emily, why don't I just have you give a brief introduction and then we'll have the rest of the team introduce themselves.
Sounds great. Hi, everyone. Nice to see you all this morning, and thanks so much for joining. My name is Emily Cardenas, and I am a manager on our North America Private Equity HR and Recruiting team. Nice to connect with you all this morning. I will appear again later in the presentation to chat more about, as Emily mentioned, the upcoming interview timing and tips to look ahead to.
Thank you, Emily. And now what I'd love to do is allow each of our business unit representatives, our associates here who've joined us, to briefly introduce themselves. And we'll just go left to right across the screen. And Pablo, why don't we start with you?
Yeah, sure thing. So nice to meet you guys. My name is Pablo Alvarez. I work here at Bain for about 10 months now. I work in the credit team, specifically within the public investing team. Prior to that, I worked at RBC. I was doing investment banking in their energy group. And prior to that, I went to USC for undergrad and been living in the States for about 13 years now, but I'm originally from Mexico City.
Hi, everyone. Nice to meet you all. My name is Luis Bigots. I am an associate in our special situations team here in North America. I've been with the firm for a little bit over a year. And prior to this, I was in management consulting, where I worked at Bain & Company for 3 years. And prior to that, I graduated from the University of Notre Dame. And I'm actually originally from Venezuela, and I moved to the States when I was 14.
Jorge, I think you're on mute.
That work now? Hey everyone. So I'm Jorge Frenier, and I'm an associate on the real estate private equity team. I'm originally from Puerto Rico, and I went to school at Wake Forest University in North Carolina prior to starting my career at the Barclays Investment Bank doing industrials. And then I moved to Bain 2.5 years ago to work in our real estate private equity practice.
Thanks, Jorge. Hey, everyone. Nice to meet you. My name is Matt Jenkins. I'm an associate on our Tech Opportunities Fund. I've been at Bain Capital for about 2 years now. Prior to Bain Capital, I was also at Bain & Company, and I graduated from Brigham Young University, studied econ and business strategy, and originally from Southern Virginia.
Hi, everyone. Nice to meet you. My name is Natalie Katzman. I'm an associate in our private equity group in the industrials vertical this year. Prior to Bain, I was at Boston Consulting Group, also in Boston. And before that, I studied physics at Stanford.
Hi, everyone. My name is Matt Sanders. I'm an associate on our insurance private equity team. Prior to Bain, I was at UBS Investment Bank in the Financial Institutions Group, and I graduated from Amherst College.
Awesome. Thank you all. And now I'm going to turn it back over to Jorge to just walk through a brief firm overview.
Okay, so we're a different kind of firm. You know, at the beginning, it starts with the premise that when the firm got started in 1984, we were very different with a skill set that was more tailored towards insights, finding out the facts, and the ability to help management teams fulfill their potential. You know, as opposed to being too focused on the finance aspect or the transactional aspect of the business, which has typically been some of the nature of the private equity industry. And we started differently than others as well. I mean, in 1984, we're sometimes confused with Bain & Co., the consulting firm, but we were actually a friendly spinoff from Bain & Co. So our partners came from Bain & Co. We're totally separate companies, and we've grown from there. So we've grown differently. You know, a lot of our firms, our size, they hired headhunters, and they went out and raised a lot of funds to build out their assets under management. And that's not really been our journey. So it's been a bit different. It's been about finding very talented people, you know, oftentimes in our core businesses. And what that means is oftentimes internally, right? And give them the empowerment and the opportunity to expand into a new business, into a new vertical, or into a new geography. And that's how we've grown. You know, we focused on building out our people, building out our skill set, and then looking at the market and trying to find opportunities for growth. We are run differently. I mean, you'll see this as you meet other firms, but we're not public. You know, we're uniquely aligned with our investors. We are a private company, and we remain 100% employee owned. So we put our own capital to risk as the largest investors in every one of our funds, which is a big differentiator of the Bain Capital way. You know, we're firm believers of what we're doing, and we want to have skin in the game, and we want to show that to investors that we really believe what we preach. And then finally, it's the team. You know, it's the private equity industry is sometimes viewed as people that are, you know, individually oriented, egocentric personalities, but we'd like to think that we defy that stereotype. I mean, we firmly believe our people and shared values remain the core of our competitive advantage. And as you meet people within the firm, you'll realize that everyone kind of has that Bain Capital way, or that Bain Capital set of values behind them, no matter the team they're working on. And this is not only present, you know, in our Boston or New York office, it's also present across all over the world in our 24 offices, which we'll touch on. So really the team and the people that you get here within Bain, it's a team that fosters innovation, a team that fosters empowerment and development of a skill set that will continue getting us to continue growing as a firm and as we're strategic in that growth. Yeah, so we're one of the world's leading private multi-asset alternative investment firms with around 180 billion of AUM. And as I was alluding to earlier, since our founding in 1984, we've been very intentional about our growth. And we've expanded into asset categories where we felt we could bring something distinct and different to investing, and that consulting heritage from being tailored towards the opportunity in the market, and how do you build on a market that's being underserved. And that's kind of been a lot of the driving force between our expansion. All the expansions that you see here, the majority of them have been homegrown. I mean, and what that means is we build business units through partnership and passion of our own employees. And I'll give you an example here. One of the employees that was on the ventures funds was the one that started the crypto fund. And this is not only present in that example, but it's present across all over the page. A lot of the major business units that are run here at Bain came from people that rose up through the ranks on the Bain Capital Private Equity as we started. So the majority of the businesses were started by people that were already here, and they found that new segment that wasn't intended to, and the company gave them the opportunity to explore this new space with fresh capital. So in the end, there are many different paths for an investor at Bain, and although we will focus on a few business units today, we have always been thoughtful about the growth into different markets at the right time as well, right? So here you can see various business units across the firm, but it's also safe to say, like, we all talk around us across the business units, and then I know people here across different business units that all help with SEO, but we also see each other in our day-to-day in terms of exploring a new market or exploring a new opportunity that may have overlapped with someone else in another fund, which I think it's one of the biggest positives about the Bain Capital umbrella, that it allows you that opportunity to meet people across the firm and not only focus on your specific unit. You go to the next page. Yeah. So as I was saying, we're 24 offices globally. It's 4 continents. I think 3 of these cities have 2 office locations. Our global partnerships gives us that ability to tap into networks and the resources which are critical to our investment strategies and our overall success. So as we've purposely expanded our business presence, we've made growth into the markets where it makes sense for us to be in, where we saw that opportunity and where we want to have people representing the Bain Capital way there. And we augment that global platform with the people that are from that market or have experience and are established in that market, but are also, living our shared values as they work around the world. And I've actually seen this play out in my 2.5 years here. I've traveled to some of these global offices to work alongside colleagues in that market, and I've met the people, and they're incredibly strong in terms of the depth of their knowledge inside their geographies, but they also share that Bain Capital set of values that you see here in the States. So I do think this is truly a very global platform and a very global set of people that all embody the same and similar cultures in terms of wanting to be better every day and wanting to do and produce great returns for our investors. And that's ultimately what's driving us.
Thanks, Jorge. Yeah, as I can attest to the strength of the global Bain Capital brand and the culture that drives each of us. It's been great to see. Wanted to start off here really by leveling on how we view our role as investors. And this is a fairly rudimentary or simple framework to a lot of folks, but really we view our role as assessing, pricing, and managing risk. So if you look at the framework here on the left-hand side of the page, we believe fundamentally that for every incremental unit of risk that an opportunity brings, we should be able to price that such that we get an incremental unit of return. And really, there's no better or worse spot to be along this curve. A balanced portfolio, in our view, would have aspects of each portion of this, where you're taking kind of high risk but high return opportunities with something like private equity, as well as low risk, maybe private credit opportunities, with debt. And so while there are many components to assessing risk, the main one that a lot of us as associates are involved in is the diligence aspect of our work, finding an opportunity and really digging in with key questions to understand what is that risk, and therefore how do we think about the price of this asset to drive the commensurate return. And so some questions that we'll ask ourselves when viewing an opportunity are, is this a good industry? Is this company well positioned? What does the competitive landscape look like? What are some of the key, macroeconomic trends that will affect this investment? And so, we try to bring all that together and then present that to folks at our firm who are able to use the pattern recognition from 40 plus years of investing, as well as have seen different opportunities in the market, and can we can collaborate together to understand the cumulative view of what that risk return is for a given investment. And so we'll talk a little bit more about what this looks like in each of the verticals on the following slides. But flipping to the next slide, we'll first start off with some of our private opportunities. And so if we think about private equity, we really view that, or what that is to us is, you're finding an opportunity, you're purchasing that company, and then over the whole of 5 to 7 years, you're improving that business such that you can turn around and sell that for a profit. And our private equity strategy is really where our firm started. And over time, we've invested in different verticals across that strategy. And so, Natalie talked about being in our industrials vertical, where we have a retail segment, a consumer segment, a technology segment. And within those segments, like technology, given what's happened over the last 20 years in the space, we've really invested more resources into building out strategies around technology, such that today we really have an end-to-end platform covering technology across our private equity strategy, doing large cap buyouts, our venture strategy, which developed in the early 2000s to tackle kind of seed, early stage investing within technology. And then more recently, in 2019, our Tech Opportunities Fund, which was founded to target growth stage or middle market investments within technology.
Cool. So maybe talking a little bit about Bain Capital Private Equity. Private equity at Bain Capital is a global business unit that is engaged in creating, sourcing, and crystallizing large-scale transactions. We have a large global platform that's split across our investment team and our portfolio team. And for some of you coming in as associates, the majority of your time will be in the investment team, though there are opportunities along the way to also get more involved with our portfolio as well. And as was mentioned, as an associate, a majority of your time will be focused on the due diligence process. So thinking about what types of companies we would like to own. And once we get engaged in a process to actually buy a company, doing the work to figure out if we actually want to own this for the next 5 to 7 years, and at what price we would be willing to purchase that company. So just to talk through a recent example of due diligence that I was on the team that was involved in the acquisition of Fogo de Chão, which is a Brazilian steakhouse that some of you might have been to in the past. And during the due diligence process, we were focused on a couple of questions. The first was around consumers and why consumers like Fogo, and what frequency they might continue to dine at Fogo, and if that was sustainable going forward. The second was around the store footprint. So how many new Fogos could we open in the US, given that growth comes from expanding the store footprint and getting more revenue and profit from doing that. And the third was around pricing the deal and building a deal model to show different financing scenarios, show different exit scenarios, growth scenarios, and figure out, based on our view of the fan of outcomes of the deal, what price we would be willing to pay. So I was an associate on that deal, and I was most involved with the first question around consumers and why consumers may or may not like Fogo. So to answer this question, we launched a 2,000-person consumer survey asking a whole bunch of questions about why customers like certain restaurants, what dining frequency certain restaurants commanded. And we discovered that there was a subset of consumers that were very focused on value and who liked new experiences, that really liked Fogo. And that type of consumer was also a type of consumer that would dine out more frequently. So this gave us conviction that there was a reason that this brand had been growing over the last 3 to 4 years, and that growth should continue going forward. So now that we've acquired Fogo, that company gets handed over to the transformation phase. And this is where our portfolio team will come in and execute a value creation plan. And for the case of Fogo, that's 1, supporting the management team, 2, opening new stores alongside management's roadmap, and 3, making the business more professional as it grows, so it's more favorable and it can support the growth that we've envisioned for the company. And then hopefully in 5 to 7 years, this value creation plan will go according to what we underwrote, and we will exit the business, hopefully for more than we bought it for, and generate a profit for the fund. So in terms of what private equity diligence can look like, it can be very different depending on what phase of the deal process we are in. So what I described on Fogo was pretty late stage. So that's after we've done a lot of work to actually identify that we want to spend time on Fogo and pursue it seriously. So the way that we can think about what diligence can look like is kind of the funnel of opportunities that we get. So in private equity, we see a lot of companies. There are a lot of potential opportunities out there. We can get those from books that bankers send us. We can get that from relationships that our partners have or principals have with either other private equity firms that have assets in their portfolio or with founders who still hold the business. Or we can also sometimes look at public markets and see if there's any opportunity to take one of those businesses private. So it's a pretty broad landscape at the start. And when we start looking at an overall market, we might do some more high-level work. Like, for example, I'm in industrials now, and I'm in the chemicals subvertical, and we can do landscaping on the overall chemicals landscape to identify that there are certain chemicals, like commodity chemicals, that are low margin, price fluctuates like crazy. That's probably not where we want to play in private equity. But there are also other subsets of chemicals, like specialty chemicals or food ingredients, that are more interesting, more protected, and where you actually have a relationship with your customer. So we do some of that work through reading analyst reports from banks, or we might talk to some consulting firms who we work with and have relationships with, but it's much more high-level work. Once we've figured out where we want to play and we have identified some companies in that space, one of those companies might proceed to what we call a first look. And that's pretty much an associate who spends 1 to 2 weeks looking at one specific company. They might run some high-level financial math. They'll take maybe a couple of expert calls where they'll call formers from that company, or they'll call some competitors and really identify if that company is interesting and we want to spend more time on it. If a company passes the first look phase, then we will move to more significant diligence. And this is where we will start staffing up the team. So you might, if you were the associate on a first look, maybe your team now looks like you, a VP and an analyst. When we do significant diligence, we might bring in our capital markets team, and they're very good at raising debt so we can finance this deal. And we'll bring in partners to start figuring out what this deal could look like. And then all this leads to investment committee, which is a panel of partners who we will present our work to. They will ask us questions, and ultimately it will be a collaborative discussion to decide where we want to price the deal. And if it gets through all of that, then you close the deal. As you can see, it's a wide funnel. We look at a lot of companies. Most of them we will not acquire, but when you get one to the finish line, it's really cool, and it's an exciting investment.
So Bain Capital Real Estate. So we actually started this business in 2018 as a spin out of, or not really a spin out, but Bain Capital basically adopted our senior partners who used to run the Harvard Endowment Fund's real estate allocation. So they've been working together. Our 6 senior partners have been working together for the past, now 15 years. But back then, about 10 years at Harvard. And Bain, they saw the opportunity to start a new fund with Bain on the Bain Capital Real Estate platform and begin actually investing in real estate under the Bain Capital umbrella. And historically, Bain Capital has invested in real estate within the credit arm. And now what basically the credit arm did is they divided the credit arm into special situations real estate and then credit. And then Bain Capital Real Estate came in as a value add plus fund, which if you look at the returns page from a couple of pages ago in terms of the risk spectrum, it basically means in between opportunistic returns and value add returns. So it allows us to do developments and conversions and a little bit more on the higher end of risk. But we started with 6 partners. It was a team of 19 in 2018. Now we're a team of I think it's like about 90 people across all the various business units within Bain Capital Real Estate. And then there's dedicated investors, right, representing about 60 people. There's been over 500 assets that we've invested on, over $7 billion of capital. We're currently managing about $8 billion. We're fundraising right now for Fund 3. So we've had 2 successful fund closings, Fund 1 and Fund 2, and a separate vehicle for life sciences that we also invest out of. And now we're closing Fund 3, so that should be later this fall. But basically what differentiates us in the real estate side, it's a very Bain Capital way of investing, right? But applied to real estate. We're doing intense research and analysis to find out how is the world changing and how is real estate going to change with it. And we try to find those opportunities in various spaces. So we're very focused on like an intense research before we actually go in and buy a property. We're not buying properties in a given market that we've never been in just because we think they're cheap. We're buying properties in a given market that we've never been in because we're going to start a strategy of scaling our ownership in that asset class, and because we believe in that asset class and that market, and then we're going to put a lot of equity behind it. So we did this, and I specifically work in the life science team, which basically is, think about it from a pharmaceutical R&D perspective of where they're creating these new drugs and going through the FDA approval process. We started that strategy in 2014. We have now over 6 million square feet under ownership. We've invested over $2 billion in that strategy. And, the tailwind of that industry becomes the aging of America. There's higher spending for over 65 than under 65. So there's a big intensified focus for healthcare costs and new drug development. And now when you see AI accelerating drug discovery, you see all those drivers pushing up the market and the innovation in that market, and everyone's going to need the real estate to do that research, right? You can't do this research at home. You need specific laboratories and specific equipment to allow to use these chemicals or various functions that you need to discover new drugs. So what we're trying to create is really focused strategies that deliver these real estate solutions that are gonna take advantage of the changing world, right? And how we're building this is we're partnering very, very local experts, and we're partnering to build new basically a real estate operating company with folks on the ground that are running the day-to-day operations of the business, so that we can invest a lot of equity into a specific real estate project or asset classes. And we have, I believe we have like 10 to 12 active platforms right now. So think about it, 10 to 12 different spaces where we invest, and we're constantly researching for new things, and we're constantly doing that research on the side as we continue to work on these existing platforms. I think one of the main things here to highlight is, the Bain Capital way, right? When you think about that, we are, what you call real estate experts internally. So then we do get a lot of calls from different teams when they're looking at a specific real estate context in their specific transaction. And we do the same with them, right? When we're going to a new market or when we're looking at tenants. I work out very closely with the life science fund team when we're looking at tenants to hear their views on like credit quality, right? A lot of these tenants, they're just starting out and they just got a $20 million check to do research, and they're going to spend it in real estate space and hiring a bunch of people. Like, do we believe in their science? Do we think that we should spend the money to get them in the building with potentially them going bankrupt next year, right? And so we do leverage a lot of the insights from the life science fund team and insights about the world as well across the different teams of Bain Capital. which I think it's just a superb way to invest in real estate and a great way to look at the world, not just only, hey, this is a brick building that we're going to make X amount of money in if we just change the doors and do this and that. I mean, we're trying to build scale and build platforms that are going to revolutionize whatever industry that we're trying to invest in. So if we go to the next page, so this is actually one of our strategies. So the strategy is content media. So think about it as studio space to create movies, right? Like studio space for Netflix or Amazon or like Paramount studio space. And we started this strategy about 5 years ago now. And this is one of our acquisitions here, Echelon Studios. And you can Google this, and this will have a really pretty video on the web. But Echelon Studios is an urban studio campus in Hollywood. And we bought this in 2021. This used to be an old Sears building. It's located less than a mile from Paramount's main studio lot. And when we look at this space, right, some of these drivers that I was talking about, there's a growth of content, right? There's the pandemic intensified this content demand and how we look at our screens, and whether it's TikTok or Instagram or Facebook or movies and Netflix, everyone's more tapped into their screens than before. And the stock that exists, it's very old. It's outdated equipment. So we're trying to build a new space for content generation, and this is what we have in mind. We're constructing the buildings now, and we estimate this to be completed in 2025. It's like a 5-acre site. It'll be pretty big. They'll have like sound stages, 4 sound stages, a flex stage, which basically means you can move around the stages and get creative with whatever you're trying to capture on video. And then there's going to be what we call here a creative village of high-end bungalows. What that means is basically a flexible workspace for people to work together to create and edit that content after producing it, right, on the soundstage. So when you think about bungalows, think about it like small little, not office spaces, but small little conference areas where people with high functionality editing suites, where people and ideas can flourish and content can be shared. And then this won't be all, one company, it'll be a mix of companies. So you get those ideas to really flex around in the space that you're trying to create. And it should be creating a very urban and vibrant environment here in Echelon, in what we're calling Echelon Studios. This will be the first purpose-built urban studio campus in Hollywood in the last 50 years. It goes along with the fact that there's a lot of old stock out there. There's not enough sites. It's very little land out there for developing these sort of spaces. So we're trying to find those opportunities, right? And this is just one of a few of the properties that we have over in Hollywood, and all tailored to a strategy of content media.
Yes.
Oh, perfect. Great.
Yep. Sorry, I was muted for a second. So yes, now I'm gonna talk to you guys all a bit about our special situations team. So I think starting with basics, so special situations, as you can see in this graph, bridges between private credit and private equity. I think what we seek to create with this fund is investments with equity-like returns with added downside protections, as well as limited correlations. I think what that means in simple terms, it creates a strategy that should provide kind of the highest or one of the highest Sharpe ratio. So when you think about kind of risk-adjusted returns, in our fund, we typically try to aim for investments that have kind of anywhere between 18 to 20% gross returns on a blended basis. So how you want to think about that is returns are going to be kind of lower than a private equity or more venture capital strategy will provide, but our downside in most of our fans are going to be pretty high, more than most of those funds. So I think that's one of the trade-offs that this fund does for LPs that are looking for kind of more downside protection, uncorrelated with the current market, as well as very attractive kind of yield here. So I think in also more simple terms, like I think this special situation funds, it just offers a very flexible mandate for us that allows us to invest across the capital structure. So in our deals in the past 2 years have included kind of anything from control buyouts to high yield private debts, and then everything in between. So we are able to provide bespoke capital solutions to meet the diverse needs of companies across the different market cycles, as I mentioned. One of our theses that I think might be interesting for me to share, that we've actually think it's been kind of very hot in the market lately, has been preferred equity on a convertible basis. And I think how we can provide that for companies is as a bridge capital in terms of their kind of next equity financing. So not sure if you guys have familiarized with how the market is doing, but the IPO market has been kind of very short for a lot of sectors. So I think a big thesis for us is to actually provide that bridge capital for companies to kind of be able to stand 2 years or 3 years before actually going public. So that has been a very interesting market for us. And then I think we can move to the next slide, Emily. So here, so I think where we focus here is, again, we focus where traditional providers don't. We combine credits, equity, corporate, and real expertise to provide kind of capital solutions. How I would divide like what our investments are. First, I think we do investments across kind of multiple geographies. We have a big team in Sydney and a big team in Hong Kong, as well as in Europe and in North America. And how our funds are structured, we raised global funds that was about kind of $3 billion. And then we also raise geographic specific funds. So the Europe team and the Asia team have their own funds as well. And then we do a lot of partnering with other teams, with other funds in the company. As you can see, some of the deals, the Control Distress of Virgin Australia, that was actually one deal that we partnered with the private equity folks in the Asia team, as well as with the credit fund. So it was actually a deal that it had three different teams working together. And it kind of fit the mandate perfectly because it was a majority deal on a very company that was very levered. So we can provide kind of the expertise from the debt side. And then the private equity team can provide the expertise from the transformational side. So I think that's a really good example of how we try to be kind of a one platform. And there's many examples of that across the different funds of deals where funds come together. I think give you one example of a deal that I actually worked with that it's not here, but the company, it's called IMS Nanofabrication. And it's actually a mask writer that is used for high-end chip manufacturing. So I think this company provides an essential product basically on the life cycle of creating chips that ends up being on kind of smartphones and laptops. So kind of like Apple, this is kind of the biggest end customer usage. This company sells this mask writer technology to chip manufacturing companies. So the big three are Samsung, Intel, and TSMC. So those are kind of the three big customers here. I think we invested, I think it was about $860 million last summer. And it was actually in partnership with Intel. So we ended up purchasing 20% of the company for $860 million, while Intel retained the other 80%. I think one of the big thesis on this deal, for us particularly, was that first, it was a very highly strategic assets with very durable technology moats. As you could probably imagine, this company has been around for 20 years. It took them a long time to actually create this technology. And they operate in a duopolistic market. So it's basically a market with two main competitors. And kind of it has a lot of entry barriers for new companies. So we felt very good about kind of the fundamentals of the business and kind of the reliability of it. I think another trend that also kind of gave us a lot of conviction on this investment was that there was a lot of mega trend growth tailwinds. Again, as you can see, there's been a lot of kind of investments put into AI, Meta, and all of that requires kind of a lot of data centers. That all of those requires different types of high-end chips. So all of those kind of have been a lot of different tailwinds for our business. And then let me see on this slide really quickly. I think another part of the special sits that we also do that we haven't mentioned is we also invest in hard assets. And what that exactly means. So we actually own a few, like several dozens car dealerships. So you can imagine the entire car dealerships with the cars. We own all that, including the hard assets. We also own an airline actually based in the Dominican Republic. And we actually not only own the airline, so control kind of the entire marketing and servicing aspect, we actually own the planes as well. We got them through a kind of a sales leaseback, but we actually are the holders of the plane. So we created a platform called Griffin, where I think we own about 60 Boeing planes, and basically we lease them to other airlines. So I think that's another strategy that I think we invested. That was shortly after COVID. So I think that's also kind of a big part of our portfolio right now, hard assets, and mostly in terms of planes, car dealerships, and real estates. In terms of the distress side, again, how GSS was born, we were born out of the distress special situations team, part of the credit side. So kind of in our nature is kind of being kind of distressed investors in some instances. And what that involves is we can buy kind of distressed debt. So buying debt at 70 cents the dollar, where we think there's going to be a favorable restructuring during bankruptcy. Oh, we actually think there's going to be, we have a big thesis in the company kind of turning things around, and that actually being worth more than that. And then another strategy for us is loan to own. So sometimes we make debt investments with the expectation that we would become the owners of the company if it goes through a restructuring process. We've had a couple of deals actually being very successful through that strategy. And then the last kind of vertical here is this capital solution. The first one that it's probably the bulk of our investments. And this includes kind of all the different kind of preferred equity, minority equity solutions that we do. And the IMS deal that I mentioned, that would fall within our capital solutions team.
Great. I think I'll spend a little bit of time on this slide. I think the next slide does a better job of explaining how credit is set up within Bain. But so we hold about $47 billion of debt, or we manage about $47 billion. We're a big team, so we have 100 professionals that focus on the investment side. So I focus on that side. We have traders that focus on the actual transaction part of the investment. We have operations team, which basically make sure that the actual transactions close and the fund operates the way it has to. I think if you can go into the next slide before we delve into what you do as an investment associate. So the best way to think about how credit is set up is there is a public investing side and then there's a private investment side. So if I focus on the public side first, and as we think about how it's set up. So I hate using the word hedge fund because you don't really short anything on the credit markets, but we are set up like a multi-manager hedge fund. And what does that mean? As an associate, you get assigned a specific industry. So for instance, I focus on telecom. So I had to learn about data centers, about satellites, about fiber, about towers, etc. I have another colleague that focuses on software or aerospace or chemicals, etc. And so you and a sector head focus on that sector or that industry, and your job is to cover the companies on the public markets that operate in that industry and form investment ideas, form investment ideas across the different strategies, right? And so the way it would work is let's say I focus on a company that's a data center that is doing really badly. Their debt is trading at 70 cents on the dollar. It's very distressed, but the return could be really high. And after going through diligence, I talk to my sector head. We perform more diligence and more work. And after that, we then go talk to a portfolio manager that focuses on that specific strategy. And so on the public side, you have a different portfolio manager that focuses on, like I said, on a different strategy. For instance, we have a portfolio manager that focuses on very distressed investments. Again, think debt that's trading at 70, 60, 50, sometimes 40 cents on the dollar. Companies that are not doing well, but we think they're going to do well eventually for X or Y reason, or we think that they're going to go through a bankruptcy and the recovery is higher than we actually think. There's other portfolio managers that focus on more, I guess you could say, safer credit. So maybe companies that are performing well, that have a good yield, that we feel really good about their businesses. We have other portfolio managers that focus on investing asset-backed securities. So we've invested in basically securitizations that focus on solar panels or fiber or securitize even weird things like IPv4 addresses and things like that. So that's your structured credit and liquid multi-asset credit part of the fund. So think of the public market, very hedge fund-like, very, very flat. It's really just you, either an analyst or an associate with a sector head, and you drive the entire investment decision, the entire diligence, et cetera. And then you have the private credit side, which I know it's a bit of a buzzword nowadays, and private credit can mean many different things depending on the fund. But for Bain Capital specifically, what private credit is, think it as investing across the capital structure, investing with really middle market companies. And what that really means is think companies that have between $40 and $80 million in EBITDA, sometimes even lower than that. And the fund has flexibility to invest across the capital structure with really focusing in junior investment and senior loan investment. So they can invest sometimes in preferred and common equity, but it really just focus, I would say 90% of the investments focus on that, like I say, middle part of the capital structure and the top. And what's the difference between this and special situations, and sometimes people can get confused because there is some overlap, is special situations, one, focuses on bigger companies, and two, they definitely have a wider mandate, while private credit focuses on more regional specific investments or companies. And so again, that's how we're set up. If you were to work on credit, you would either focus on private credit or focus on the public investing side of things. And again, I would say overall, if you can go into slide 18, the way you operate as an associate is very similar. And honestly, as you've been listening to all my colleagues, the job itself is similar across the funds. And the reason for that is ultimately what you're doing is you are looking at a business, understanding if making sure you understand the business, making sure you understand the industry, making sure you can identify relatively quickly what are the investment merits, what makes this business work, and what are the risks. And that's the risk for us is a very specific focus, and what can go wrong, what are the things that cannot work out. And so the way you do that is through talking to experts, doing analysis, doing a lot of reading, and frankly debating with colleagues and partners about the specific business. Once you have that and you have a good picture of what the business is, then you go into the financial modeling or the financial skills. So a lot of the skills that you guys are obviously learning in investment banking or management consulting or even in school. And so ultimately you can have a really good qualitative view of the business, but you need to eventually do all the math and actually forecast the different scenarios and actually see what the returns look like. And so that is the financial skills aspect of it. And then finally is what we're calling here in this slide professional skills. And so that's actually writing the memo or preparing the materials, whether that's an actual PowerPoint or Word document, doesn't really matter. But ultimately, a lot of the skills that are expected from an associate role is being able to communicate your ideas clearly to your sector head, being able to put those material or those ideas into writing or into a presentation, and being able to present that to the portfolio managers or to an investment committee. Again, in many ways, very similar to how other funds within Bain work. And then one final say I would say about credit specifically, and this is more on the public side, just because on the private market, it's a little bit harder to, I guess maybe you guys heard of alpha or trying to measure how much you're actually outperforming other competitors. On the public side, the good thing is it's very easy, very, very, very easy to see those those returns when you compare yourself to like a passive index benchmark or you compare yourself to other competitors. So if you go back to slide 17 very briefly, and then that'll be the end of my section. So for the public side specifically, we've been the top quartile performance across all our funds, across our CLO. So we actually manage our own collateral loan obligation warehouses. We are top performers in our loan specific strategies. We are top 10% in our total return fund. So think of a distressed debt riskier side of the strategy. And so yeah, I think that speaks to the way we're set up and yeah, just the amount of investment that has gone into the credit platform.
All right, so I think it makes sense that I go last here because one, insurance is the newest fund at Bain Capital, but also because our strategies touch on a lot of the different strategies that my colleagues have discussed so far. So on the insurance team, we really have two main mandates. The first one is investing in private equity out of our insurance private equity fund. And so we're mainly targeting middle market insurance opportunities that are mainly across the insurance value chain. So that's anything from distribution to the insurance carriers that actually underwrite risk. And I think it's actually a pretty exciting opportunity right now for two main reasons. First is because insurance has historically been underinvested, and thus it has not been the most innovative or changing industry. And so that means there are opportunities to bring in capital, bring in new ideas and unique deal structures that are able to create value. And the second reason is that it is a little bit more on the niche side. And so by bringing a team that is that has expertise in insurance, I think you're able to find unique opportunities and just great investments. And the second mandate on the insurance team is asset management. And what we do is we partner with insurance carriers and help them to increase the yield on their investments. And that's how it ties back into the whole Bain Capital platform. So when we are able to partner with an insurance carrier, we may help them invest $1 billion throughout the Bain Capital platform. So some of that may go to private equity or private credit and special situations. And so, we're able to partner with insurance carriers through the asset management business that we have, but also invest in them through our private equity platform. And in the interest of time, I think we can skip this one.
So just really quick, but why choose a career in investing? Our view is that investing takes the best of a bunch of other careers. So as an ex-management consultant, one of the things that I learned was how to solve problems and think outside the box, and you definitely get to do that here. And another thing I learned as a consultant was working in a wide range of different environments and team rooms. And certainly here you also have the opportunity both internally and externally to work in a variety of different settings. You also use the skills that you are or will develop as an investment banker. You're trained in financial and accounting literacy here, and you develop modeling skills. And lastly, there are opportunities to be entrepreneurial and to go into business operations. As was mentioned previously, a lot of the expansion of the Bain Capital platform has been from people who have been entrepreneurial and wanted to look into a new business unit. And so there is definitely a culture of encouraging that here.
Fantastic. Thank you, Natalie. I am going to spend maybe 15 seconds here, but did just want to mention that as just part of the overall culture piece that Jorge touched on very early on in the presentation. We do have a number of employee networks here at Bain Capital, and many of my colleagues on the line today are involved in these networks, but these really help to support our various colleagues to identify in a variety of ways. And you can see those employee networks listed here on the left-hand side of the page. I'm here as a resource. My team, really oversees these groups. And so if you do have any specific questions about employee networks and our culture in general, please don't hesitate to reach out. But I do want to make sure that Emily Cardenas can just touch very briefly on our interview process and next steps from here.
Yes, absolutely. So focusing on this slide here at the left-hand side on the structure of our interview process, during first round interviews, you will meet with 2 members, typically of our VP or principal team on the investment staff for case-based interviews. First round interviews are typically conducted via Zoom. For candidates that do proceed to final round interviews, you will meet with anywhere from 3 to 5 senior leaders on our investment team, just dependent on which business unit you are interviewing for. You will additionally meet with one HR leader for a behavioral kind of resume-based questions. And again, final rounds are also conducted either via Zoom or in person, just dependent on which business unit you may be interviewing for. Where I did want to focus on today is really on the right-hand side of the slide here in terms of what we're looking for candidates to demonstrate throughout our interviews. So as I mentioned, across Bain Capital, we use case-based interviews, during which your interviewer will present you with a hypothetical business scenario and really just based on this given set of data, ask you to draw conclusions. So at its core, I would say it is a critical thinking, really problem-solving exercise here. So we bolded the first bullet, this ability to develop a structured framework, again, based on this given set of data. Walk us through your thought process. How did you get from point A to point B and so on? We're looking for your facility with numbers and really a kind of mental math fluency here. I did want to underscore that there is no written component. So there's no LBO models or any testing like that. And really, this is a conversation. So any questions that you might have, just ask them. It's definitely, we want to support you and want to make sure that you have all the information that you need here. So if we flip to our next slide, this has the contact information here of various points of recruiting contacts across our firm. Again, I sit on our North America private equity team and do lead recruiting efforts at the associate level. So always feel free to reach out to me if you have any questions or want to set up time to connect. And likewise, there are other contacts here throughout the firm, and always feel free to reach out for time. With that, I'll hand it back to, I think, Amy.
Thank you so much, Emily, and everybody for that really in-depth presentation today. I know that we're a little short on time, so I will mention one of the questions that we received. And again, the other ones that we didn't get to, feel free to reach out and we'll try to get you some answers. But one question that Corey Miller had for us today was, what differentiates Bain Capital from the other mega private equity funds? If you can talk to us a little bit about that.
Maybe I can start at least on the private equity business unit. I think one thing that differentiates us is that one thing that differentiates us is that firstly, we do a lot of work internally. So if you go to some other firms, they'll outsource a lot of their commercial diligence by hiring a consulting team, and we'll still hire a consulting team, but it's more to supplement the work that we do internally. So we like to ask really deep questions and try to come up with the approach of how we're going to answer those questions ourselves. So I think that's probably pretty different. I would say maybe another difference is our team structure. Like I think a lot of other mega cap funds you'll see, they're mostly coming from banking. We here aim to have 50% bankers, 50% consultants, and after 1 year, you can't really tell who the ex-bankers versus the ex-consultants are. But I think that's just trying to bring in a little bit more diversity of background, given that we do a lot of the commercial work ourselves.
Thank you for that, and for your presentation. Thank you.
Thank you so much, everyone, for joining us today early this morning, and for the Bain team for this incredible presentation. Look forward to connecting with you all again soon, and have a great rest of your day.